Is it experiencing a resurgence? The price of gold is on track to finish its most successful week in the last 7 months. The value of gold experienced an ascent on Friday, marking its most prominent week since mid-March, due to the decrease in U.S. Treasury bond yields. Throughout this week, interest in gold has grown as markets consider that the Federal Reserve's rate hike cycle may have come to its conclusion. The value of gold saw an increase on Friday, marking its most prominent week since mid-March in line with the decrease in U.S. Treasury bond yields. The spot gold price rose by nearly 1%, reaching $1,886.40 per ounce, while U.S. gold futures surged by 0.9% to $1,899.20. Despite the robust inflation data in the United States on Thursday, senior analyst at Active Trades, Ricardo Evangelista, noted that markets were increasingly starting to consider the possibility that the Federal Reserve may have reached the peak in its monetary policy cycle. Evangelista stated that declining yields, the depreciation of the dollar, and uncertainty surrounding the conflict in Israel are favorable aspects for gold. On Friday, U.S. Treasury bond yields and the value of the dollar decreased, reversing their strength from the previous session, which exerted pressure on the price of gold. This change followed the release of data indicating an increase in U.S. consumer prices in September. Before the release of inflation data in the United States, the price of gold reached its highest levels in 2 weeks on Thursday. This boost was attributed to the cautious stance of key policymakers, who indicated that the recent rise in U.S. Treasury bond yields could reduce the need for future interest rate hikes. This, coupled with the search for a safe haven amid the conflicts between Israel and the Palestinian Islamist group Hamas, propelled this non-yielding asset to an increase of nearly 3% this week, marking the largest surge since mid-March. Investors also examined recent inflation data in China, the largest consumer of gold, which showed that consumer prices lost momentum and factory prices declined slightly faster than expected in September. Both indicators point to the persistence of deflationary pressures.